morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. IndiGo's Rakesh Gangwal accuses co-promoter Rahul Bhatia of questionable related party transactions and governance violations, seeks SEBI intervention. TCS reports a muted revenue growth of 0.4%, much below analysts' expectations. Margins shrink to a two-year low. State Bank of India cuts lending rate by 5 basis points across all tenors. This comes just a day after RBI Governor Shaktikanta Das said he expects faster rate transmission. And US President Donald Trump criticizes India's move to impose tariffs on a host of American products, tweeting that such moves will no longer be acceptable. Must say that's gotten a few traders on the edge of the seats trying to figure out which are the US exporting companies which might take a hit if indeed Trump were to take a retaliatory action. But we'll get to that in a bit. First, what's happening around the world? Well, the US markets or the world markets by and large have seen 2 or 3 days of a continuous drop. And despite all of these, I think the US markets in particular are still trading in areas which look overbought. Remember, we highlighted this a few days back about how this is the level, and this chart shows the second chart, the chart at the lower end of the screen shows how from these levels the US markets have consistently retreated, and if that were to happen, that will not augur well for any of the world markets, including India. Now, what happened to the US markets overnight, or what's happening to the Asian markets right now? Flattish to a marginally lower day. Dow Jones was marginally in the red, the others were flattish. Nasdaq had a very bad day a day before, so a bit of a mean reversion, but essentially a flattish move, and that's showing in the rest of the Asian screen as well, because Nikkei, or whichever index is working, Nikkei, Shanghai, etc., all of them have a very flat trade. SGX Nifty 2 indicating a start, which is marginally in the red. Now, can Trump and any kind of retaliatory action from the US side have an impact on the export-oriented companies, and will that have an impact on the index? That's the other key thing, because Donald Trump in his tweet last evening India time rather, said that India has long had a field day putting tariffs on American products. It is no longer acceptable. Remember, this is the second such quote-unquote threat from Donald Trump on Twitter in the last 1 month, and this would make people maybe think about whether he's serious about this, and if any curbs come in, would that have a dampening sentiment on India as well? Could India be in the firing line, and will that have an impact on valuations, so to say? Let's wait and watch. Time will tell. Brokerages have had a mixed view on all of this and the valuation picture post-budget as well. So while Nomura is up the target price, I think the big brokerage call for the day came in from HSBC, at least on a macro-specific basis, came in on HSBC. They've downgraded India. They've raised China to overweight versus India. They've downgraded India to neutral. They believe that growth and valuations are better in China as compared to India, and demographics are not better than China when it comes to India. So multiple factors as a result of which HSBC has downgraded India to a neutral rating. Now, does that have a big impact on India immediately? No, not necessarily, but there are a host of factors which are not quite going as per plan. Let's wait and watch what happens. As I said, the SGX Nifty indicates a start which is flattish in the session, so don't expect too many fireworks on open, but there'll be specific stocks that all of us should watch out for, because a bunch of news makers in the session today. Can't not start off with TCS, and Agam will come in and speak at length about this. I won't dwell too much on it, but keep in mind that the revenue has missed estimates. Margins are at 8-quarter low, even though they might be in line with consensus at 24% or 24.1%. Margins continue to fall for the IT giant, and somewhere people will question if the global trade war is having its impact. We don't have retailers or BFSI companies really coming out in a big way and cutting spend, discretionary spend on information technology. If that were to happen, would these growth estimates that people have penciled in for Indian IT be under question mark and a cloud? That's the key question to be asked. I wonder if the overhang stays. TCS at 2133. Let's see if there is some downside in the session today. The split is wide open when it comes to Interglobe Aviation. Co-promoter Rakesh Gangwal has accused Rahul Bhatia of governance violations. Now, we're going to be talking at length about this, so I urge you to stay on, because we'll tell you all that you need to know when it comes to Interglobe Aviation, the past, the present, and what the outlook ahead could be like. Remember, the stock hasn't corrected too much. Brokerages, in fact, have been sanguine about it. Goldman Sachs, irrespective of this issue, has come out with a very positive note on aviation and Interglobe Aviation in particular. But I wonder if this has the capacity to put a bit of cloud on the stock price of Interglobe Aviation, not just right now and today, But over the course of the next 2 or 3 months, we'll get to know about it in a bit. Speaking of Goldman Sachs, like I said, they have initiated coverage on SpiceJet with a buy rating, a price target of 161. They believe sector-leading profitability and improvements going ahead will help the stock. The expanding market share with a regional focus really helps SpiceJet, so do watch out for this one. Maybe it'll react positively today. And just one last stock, I just want to bring out the price chart of Rural Electrification Corporation. I think it's an important one to monitor. It corrected about 15-16% in trade yesterday. At some point of time, the price to book and the dividend yield for REC will be in focus. There's a technical factor as a result of which the stock has gotten sold out. Maybe selling of about 650 crores expected, 120 crores done yesterday. Could there be some more overhang today and over the course of the next few days? Sure. At some point of time, people will start looking at the valuations and wonder if there is merit in going long on REC as well. Time will tell. I don't quite know. I'm not trying to predict this, but do watch out for REC too. However, let's tell you what's lined up on First Word today. Collection of the top editorial stories that we want to bring to you. And start off with TCS really, because that's the more important earnings to monitor. It's not been the best start to the earnings season, with TCS failing to meet revenue estimates in the first quarter. Margins also came in at 8-quarter lows, as had been anticipated by analysts though. Agam Vakil though tells us what analysts didn't anticipate and took the street by surprise, and what the outlook ahead could be. Agam, good morning.
Good morning, Neeraj. So the first quarter and the fourth quarter are supposed to be the strongest in the IT sector. If you lose and if you miss out in revenues in the fourth quarter, that means that you are, or the first quarter, that means you have to revise your projections, and that is something that may work against, well, TCS in this case. Even though the miss was very slight in the top line, well, you're looking at a miss all the same. So when it comes to dollar revenues, we are looking at a 1.6% growth, and again at around $5,485 million. This is below the expectation of $5,536 million. Digital revenues, sure, they did grow. They continue to drive growth as well. And we've seen another 42% up move year on year, now comprising 32% of the overall revenues pie. But, well, coming down to your next problem, something once again which is, well, plaguing the entire industry, and that is operational margins pressure on account of wage hikes, as well as pressure on account of course, INR appreciation. If you actually come to see, we're looking at your operating margins coming in at around 24.2%, the lowest in 8 quarters. The last time we saw a lower operating margin was in the first quarter of FY18. So it's been that long since TCS has actually, well, come up with such weak margins. We already know that there has been a wage hike. There is one important factor here, that the wage hikes this time around, a lot of analysts are estimating, are higher because the companies want to arrest the attrition, which is also significantly high and has been off late. Employee benefits, as you can see on your screen, as a percentage of revenues is now at around 41.9% against well, around there. But it's the fee to external consultants, which includes subcontractor costs. It stands at around 8.2% against 7% year on year. So there certainly has been an increase in employee costs. Let's very quickly talk about your verticals too. So in rupee terms, banking financial vertical has seen a decline. It's largely on account of volatility in capital markets, something that we had spoken about in the preview. And of course, when it comes to retail and CPG, that's also down. Again, the management is saying it's been a very volatile vertical, and it's not necessarily, it doesn't necessarily have to do anything with the sector, but well, more to do with the retail segment. And of course, manufacturing is also declining, but that's largely on account of weakness in continental Europe. Finally, key geographies, we're looking at 1.4% growth in North America. Continental Europe is looking at also a good growth. But if you leave aside the your geographies, Neeraj, it's about banking and financial sector, because that's where you have 50% of your revenues come in, and well, we are seeing a little bit of volatility, and that's the reason why we've seen that miss when it comes to the top line.
Anything from the commentary from the management that stood out, Agam?
They are maintaining that they do not look to accelerate their revenue growth. They want to remain around the double-digit growth in top line, and that's what they are looking to target.
But they're confident about the year at large?
They do certainly seem confident, yes.
Just very, very quickly, any of the brokerages have given out a verdict which is slightly different than what they had earlier?
No, not necessarily. Everyone's maintaining their rating, even though there may be a little bit of a downgrade when it comes to targets. But even those reduction in targets are not as significant.
Okay, Agam, thanks so much for putting that into perspective. So that's TCS for you. The question that you're going to ask is, before this earnings season begin, 2 days before, we've had some consumption companies come out and sound warnings about what the earnings picture could look like for Q1. Now you have one of the largest IT companies coming and doing that, and if others were to follow suit, then you really have to put a question mark on the kind of earnings growth that we'll see in Q1 from India Inc. Citi yesterday, or day before, spoke about an earnings growth of 3%, revenue growth of 3% for Q1. That tells you something's not right when it comes to the earning picture. And speaking of something not being right, the spat between IndiGo's airlines promoters is now out in the open as well, so something's not right there too. One of the co-founders and director, Rakesh Gangwal, has written to SEBI seeking the regulator's intervention in what he describes as corporate governance issues at the airline. Joining me now, Menka Doshi, Paswini Upadhyay and Somit Sarkar to take a deep dive into some of these issues raised and the importance of this. Now, Menka, I read the stories as well that we put out, so I urge viewers to come in and read those too. But let's start with the allegations. What did you make of it? You've looked at corporate history for a long time. What do you make of the nature of these?
Okay, let's stick to the facts first. There's about a 50, 60 odd page filing that hit the stock exchanges yesterday. And what I'm going to try and do is compress what those 60 odd pages of communications between both promoters, and then finally Rakesh Gangwal's communication to SEBI, which is also copied to the Prime Minister of India, the Finance Minister of India, and a whole host of other ministers, what that communication has to say. So at the core of this dispute, very clearly, are two issues, if you take out all the dramatics, okay? One is what Rakesh Gangwal calls questionable related party transactions. These are transactions between IndiGo Airlines or Interglobe Aviation, which is the parent company, and Rahul Bhatia entities. Rahul Bhatia, as everybody knows, is the co-promoter. Gangwal owns about 36 odd percent, just under 37, and Bhatia owns about 38. Okay. The second issue that he's raised is what he calls unusual rights. Let's deal with the first issue first, because related party transactions are material, right? Now, I think Somit has, as you know, in previous stories that we've reported, pointed out that these RPTs, as they're called in short, amount to less than about 1.4% of total revenue, right? Now, they have grown quite rapidly in the last 7-8 years, so I'm not taking away from that, but they're still a very small fraction of the turnover. But Rakesh Gangwal says the materiality of this is immaterial. It is really the governance issue that lies at the heart of it. And he claims there are several alleged irregularities in the way these related party transactions have been done. Okay, what are they? Now, he has claimed that they were done without audit committee approval. Competitive bidding was not done to get a sense of whether these RPTs had to be done with Bhatia entities or the company could have gotten a better deal somewhere else, etc., etc. But let me give you the formal view on this, because what happened in about March this year, between Jan and March this year, is the IndiGo board, which had then got a new chairman under M. Damodharan, asked Ernst & Young to look into the related party transactions. And according to Rakesh Gangwal's letter, this is what Ernst & Young found. Now, we don't have that report, because that report apparently went only to Mr. Damodharan and nobody else in the board, on the board rather. And so we have no way of verifying whether this is in the report or not, but this is what Rakesh Gangwal's letter says. It says that the EY report says that some of these RPTs were not approved by the audit committee, that some of them were executed before audit committee approval, and that some of them were extended without audit committee approval, even though they were extended on the same terms that the audit committee had approved earlier on. Okay, this in a gist seem to be some of the procedural irregularities. Gangwal has more questions to ask about the RPTs, including, like I said, why was there no competitive bidding done? Did the company actually distinguish whether these were absolutely necessary and unavoidable, or could they have been done with any other business entity? Now, I think what the company, Gangwal says, acknowledges some of these irregularities. Okay, so this is what the company says. Again, according to Gangwal's letter, it says that numerous RPTs were done without seeking competitive bids. Yes. Secondly, in the cases where a third party was asked to provide an arm's length representation, was the related party transaction done at arm's length? Those third-party representations were earlier sought, but they were sought for tax purposes. And in 2016, they were discontinued except for international transactions. So thereafter, they had stopped seeking third-party representations on whether these RPTs were really or truly at arm's length or not. And then Gangwal's letter claims, the company has also said, we have quite a few transactions that had been signed with retrospective effect. So I've laid out for you what the core issues Gangwal had with the RPTs, what the EY report had to say, and what Gangwal claims the company has acknowledged as irregularities in these RPTs. Okay. Now let's come to the second issue. This is the related party transaction issue. This is at the core. The second issue is the issue of what Gangwal calls unusual rights. When these two guys got together and founded this airline, Gangwal had 37%, Bhatia had 38%. Gangwal agreed to a shareholders agreement which effectively gave a bunch of controlling rights to Mr. Bhatia. Okay. At that time, he was perfectly fine with it. He goes on to explain in his letter that, you know, we were great friends, there was deep trust, and I thought that this was perfectly okay. But now he's raising issue with these unusual rights because he claims that having looked at the way these related party transactions were done, now it seems that these rights are being abused. So what are these rights that he has highlighted? The fact that Mr. Bhatia has the right to appoint 3 of 6 directors on the board of IndiGo, and the board is limited to 6 in the articles, that the chairman will be appointed on the nomination of Mr. Bhatia, that Mr. Bhatia's entities have the right to nominate the managing director, the CEO, and the president, and that there is a voting arrangement between both shareholder groups that requires Mr. Gangwal and his affiliates to vote alongside the Bhatia group when it comes to the appointment of directors. So these were all rights he was fine with at the inception of the company stage, but now he claims that these rights are putting, in considerable power in the hands of Bhatia, and that power is being abused in some way, as reflected in the related party transactions. Therefore, he wants these rights reviewed. Fine. So that's where the two key issues have come up. Now, what happens next? So Gangwal has asked for 2 things. He's asked for SEBI to look into these rights. He says, you know, please look into these rights and please ask the company to amend the articles, because these rights are contained in the shareholders agreement and many of these are in the articles as well. The shareholder agreement comes to an end in October, November, but the articles will remain, so many of these rights will survive the shareholder agreement. He's asked for SEBI to look into these rights and say, hey, please ask the company to amend the articles of association. The second thing he's asked for, this he's going to shareholders with. EGM. He's asked for the calling of an EGM, and he's asked shareholders to do 2 things. Ask the company to enforce the code of conduct, which also relates to related party transactions. And secondly, he has asked for a bunch of new protocols or safeguards when it comes to related party transactions. He has asked for shareholders to recommend these to the board and not mandate these to the board. And I'll get into the legality of why later on. But these are the 2 things that he has asked at the end of this, sort of argument altogether. Now, so far, this is all Gangwal's view. We'll get to the Rahul Bhatia view, which we know of because some of Mr. Bhatia's letters are also in the filings. Okay, here's what Mr. Bhatia has had to say, that there was really no additional special interest that Bhatia entities got from these related party transactions. He has said, in fact, that the company, which is IndiGo or InterGlobe, has received the most favored treatment in each RPT. He has pointed out that the EY report found maybe procedural irregularities, but no substantive irregularities. He has said the CEO, which is Ronojoy Datta, also claimed, while all this battle was going on over the last 6-8 months, that he looked high and low on RPTs, but there was no smoking gun to be found. And, of course, Mr. Bhatia claims that Gangwal's real agenda in all of this is to dilute and diminish the controlling rights of the Bhatia group. And that's why he's using RPTs as a facade, to pretend that there is governance problem in the company, whereas, in fact, there is none. This is what Mr. Bhatia has to say. There's a very dramatic quote in one of the letters that we've picked up. It's long, so you'll bear with me, but it's dramatic, so it's worth listening to. Okay. This is what Rahul Bhatia has to say about Rakesh Gangwal. So here is a man, I'm quoting here. So here is a man who took full advantage of the situation and the opportunity offered to him 14 years ago when he was generously allotted 50% equity, who did not mind that the Bhatia group was taking the entire economic risk, which at peak exposure was in excess of 1,100 crore rupees. That's substantially higher, or 6-fold the contractual obligation of 200 crore rupees. All right. This is a man who happily agreed to the fundamental proposition that the IGE group, which is the Bhatia group, will have control. This is a man who obliged himself to support the Bhatia group in maintaining control through a voting rights agreement that was embedded in the shareholder agreement and in the articles. This is a man who, with great delight, participated in the IPO, at which stage he once again agreed that the Bhatia Group would retain control. This is a man who did not raise for 13 years a whisper against any of the related party transactions. This is a man who year after year signed and approved the annual accounts without raising any objections. Now, at his convenience, he is dismissing as unusual these controlling rights, which are part of the fundamental architecture. He has shied away from taking a position on the board of a startup, being scared of liability in a highly regulated sector. I'm not sure why Bhatia was saying this, because he is on the board, Gangwal. He claims to be a guardian of corporate governance, and then he ends this point by saying alternate facts are easy to construct, truth hurts. So I've given you both sides of all of this. I did speak with Rakesh Gangwal last evening to try and get some background to this and what he hopes will be the outcome. And he claims he has only one point he's fighting, irrespective of what Bhatia's allegations are. He says, and I'm quoting from what Rakesh Gangwal told Bloomberg Quint, that in India there is a related party transactions ecosystem that has built around airlines, which is not good in the long term, and history has spoken to it. Now, quite obviously, anyone who knows Indian aviation knows he's referencing airlines like Jet Airways, etc. This is the battle altogether. With this, I'm going to hand it over to Somit, who has been looking at the related party transactions, who's been watching what brokerages have to say about all of this, and who has some idea of where the stock will be this morning.
So if you see over the last 8 years from FY 2011 to FY 18, Interglobe Aviation had related party transactions with nearly 17 companies, of which it reduced to nearly 13 by the end of FY 18. Now all these companies were either controlled, either owned, controlled, or somehow related to Rahul Bhatia. Now the transactions with these companies were related to commission of ticket sales, rental agreements, crew accommodations, and training services. Now the total amount of these related party transactions with the Rahul Bhatia Group companies increased to nearly 313 crore rupees from 31.6 crore rupees in FY 11. Now we do not have the FY 19 numbers because the annual report is still not out, and the company has not disclosed their related party transactions so far for the financial year 2019. Now though the amount has surged nearly 10 times in the last 8 years, as a percentage of sales it remains close to only 1.3%, which is very low, and this is the reason why none of the investors or analysts ever questioned about this related party transactions so far. However, according to Rakesh Gangwal, these related party transactions were not done in arm's length basis, and proper approvals from the audit committee were not taken for this transaction. Now he has given an example in his letter where he's saying that the IndiGo's primary office in Gurgaon was rented by a Rahul Bhatia Group company. Now as the rental agreement expired this year, the renewal agreement, rather than seeing an increase which in normal course should have been an increase, were lower by more than 25% compared to what IndiGo was paying earlier. Now Rakesh Gangwal believes that this was because of the intense scrutiny that happened on the related party transactions. There has been that the rent has been lower by more than 25%, which shows that there were the earlier transactions were not done on arm's length basis, and proper approvals from the audit committees were not taken. Now Mr. Gangwal in his letter also blamed the newly appointed CEO, that is Anuja Datta, for calling the related party transaction issues as administrative issues and not an airline related issue. Now his exact lines were, "It is startling to hear that the RPTs between the company and the Rahul Bhatia Group companies are administrative issues and not an airline issue." Now we sincerely hope that the CEO, which is Anuja Datta here, who has been nominated by the IGE Group, that is the Rahul Bhatia Group, but not classified as a nominee CEO of the IG Group, is not in some way conflicted by these issues. So he's not only pointing the CEO, that is Anuja Datta, but also saying that there has been not proper approval taken in from the audit committees, and the transactions were not done on an arm's length basis.
Okay, I think my second question to Somit and you, Neeraj, will be how will the markets perceive this? How have brokerages reacted to all of this? At this stage in the aviation market, where and how is IndiGo poised? And therefore, can operational challenges be kept separate from these ownership challenges? And that really is the question that every single shareholder will be asking today, saying, is there any way to keep these two distinct? Can the airline run as it has been with 50% market share? And can these promoters fight it out and figure out whatever solution? Whatever your views are on this.
On operational issues, even Credit Suisse pointed out that they haven't seen any operational issues so far in the airline. But two things that I think would have been could have been the operational issues because of these issues that have been going on with the promoters. Firstly, if you remember, the company had clearly stated out their plans of long-haul international routes. In fact, they were supposed to buy Air India for this long-haul international routes, but still there has been no clear plans or strategy that the company has put forth related to this. So that this could be one of the operational issues that the company could have been facing because of this promoter issues. Secondly, nearly 2 years back, the company had announced a change in its business model. It decided to own more planes rather than sale and leaseback model, which it has been following right from the start. Now, this move was supposed to help the company lower its operating costs, but despite this announced change in business model, the company has stuck to its leasing model, and the number of owned planes in its career has increased by only 9, while in the same period the company has added more than 30 aircrafts in all, and of this it owns only 9 more aircrafts. Now, despite the announced change in business model, the company is still not owning more planes and following its old business model, that is the leaseback model. So this could be 2 operational issues.
So you're saying that, you're saying that
yes,
it could be assumed that some of this difference in
yes,
opinion has started reflecting
because of the
in
promoter
some
issues,
ways, as yet not material,
yes,
but in some ways in the operations of this airline as well.
In fact, Credit Suisse also mentioned one of the point that going forward, operational impact cannot be ruled out because of this promoter issues, particularly now that the case is in public. So there could be some operational issues that IndiGo could face going forward.
Okay.
Just one more point to add to this, irrespective of whether or, let's assume that it's in the realms of assumptions that there will be operational issues over the course of the next 6 months. They may well be, but let's assume that there aren't too many operational issues. The question mark would be that if an airline wherein the 2 large shareholders and the promoters have a spat and a public spat now, do the multiples take a bit of a derating? Now, even if you take the regional airlines, and Somit, bring in your views out here as well, but 5 to 7 times comparable regional airlines, 1 year forward EV/EBITDA. InterGlobe at the current prices would be way higher than 8 times. At 1,300 odd rupees, it's at about 8 times EV/EBITDA. So therefore, the question mark to ask is that even if there's no earnings impact, and there might be an earnings impact, but even if there's no earnings impact, could there be a valuation multiple derating which might bring the stock price down? I think that is that one question that people will be waiting to see on the bourses.
So, the reason why I find it difficult to believe that there would be no operational impact, let me tell you why, okay? This is not a board that's evenly divided, right? This is a board which has 6 members so far, of which 3, including Mr. Bhatia, are from the Bhatia camp, if I can call it that, right? 1 is Mr. Gangwal from the Gangwal camp, and 2 are independent directors. But Mr. Gangwal has raised issue with the fact that even the independent director who is chairman, which is Mr. Damodran, was in effect, as policy and as part of the shareholder agreement, was in effect a nomination put up by the Bhatia camp, right? When you have 6 directors, technically 3 or 3.5 of which on the Bhatia side, and maybe 1 is on the Gangwal side and 1.5 is in the middle floating around. How does a board take decisions if the 2 promoters, are at loggerheads, right? And let's look at the 2 scenarios at this point in time. What happens? You've seen about 2 months of speculation. Now, very clearly what the hostilities are. It's very possible that if this airline's stock hurts tremendously, that might prompt the 2 promoters to come back to the negotiating table and say, hey, look, we're diminishing our own wealth, so we should do something about it. That's one scenario, but I give that a very slim margin of possibility simply because they would have considered all this. The IndiGo stock fell when this was first reported as well, right? It fell 9% then, right? And so they know that this is going to have an impact on the stock. There are threats being exchanged in these letters as well, right? But there's a slim chance that if it falls dramatically, that might prompt these 2 guys to come and say, hey, look, let's renegotiate this within ourselves. Yeah. The other one is you take it to court. If the 2 promoters are fighting over control, as is the core issue here, and issues like related party transactions in court, this is going to be a long battle. Yep. If what Mr. Gangwal effectively wants at the end of all of this is a change in this control scenario, he wants more governance, vigilance over all of this, he's not going to necessarily give up easily, right? Otherwise, it would not have reached this stage.
True.
So, how does a board then function? Having described the board structure to you, how does the board then function as an independent board, despite the fact that it has Mr. Damodran on it, Anupam Khanna, who's a well-known independent director, without being influenced by what's going on between the 2 shareholders? And then how can it not impact operations, whether it's the decision to do long-haul international routes, or anything else, you know, lease versus own, or any other decisions?
Well, so and we'll get a battery of experts to talk about this as well. But let's get in Payaswini as well in this conversation as well. In Payaswini, you've heard what the points that both Menka and Samit wanted to put out. Now, the spat came out in the public only last evening, but we've been through this in the past. Quick observations.
Neeraj, I will now weigh in on what next and the question it raises to my mind, given that Menka and Samit have laid out the facts pretty clear here. So there are two or three questions that, all of this throws up. One is, like Menka mentioned, that Mr. Gangwal has asked SEBI to intervene. So under what specific law or power is Mr. Gangwal expecting SEBI to make necessary changes to the controlling rights of the IGE group, which, as we mentioned, are now going to be now in the Articles of Association and will survive the shareholders agreement that is due to expire in November this year. So that's the one question, that can SEBI intervene, in what kind of rights a promoter or a shareholder gets as per the Articles of Association of a company. The second question is, how seriously will SEBI take these allegations? In a normal instance, if let's say a minority shareholder or one shareholder writes to SEBI, I'm not sure if SEBI sits up and takes notice in every single case. But in this particular scenario, given that Mr. Gangwal has been with the company since inception and he is an important promoter director, it's quite likely that SEBI will intervene as far as the RPT issue is concerned. The third, and in this, all of this, the resolution which Mr. Gangwal is now intending to the shareholders, how should shareholders look at the issue of RPTs and the protocols that Mr. Gangwal is suggesting? Should the EY report, which is so far been confidential, placed before the public? Because Mr. Gangwal has raised questions as to this: what was the scope of the EY report? Was it defined narrowly to exclude some of the problematic RPTs, or was it an overarching mandate? We don't know that. So these are the three issues that stand out for me from all that has happened for the past few months and from the documents last evening.
Hey, good questions, Payaswini. Let's put those to the experts that we have joining us this morning. Now we have Tushar Cooper, advocate at the Bombay High Court, joining us to weigh in on the legal aspects of this, and aviation analyst Amrit Pandurangi to give us a sense of where he thinks the stock might go in the days to come. Mr. Cooper, thanks very much for speaking to us this morning. Let me try and get the legal perspective from you first on how you think SEBI will view these rights embedded in the shareholder agreement and also in the Articles of Association, what Rakesh Gangwal now calls unusual rights, and whether SEBI is likely to have any objection to the way these unusual rights have played out over the course of the last few years, given that SEBI has so far not invalidated this shareholder agreement nor disallowed for these rights to be embedded in the Articles of Association.
Okay, we have two issues here. One is as to whether or not these, what you term unusual rights, is something which is offensive to what SEBI would consider valid and tenable. In my view, such rights which are reserved under the shareholders agreement and which have been embodied in the articles can and ought to be upheld. However, if in the implementation of those rights and in the exercise of those rights there is wrongdoing, SEBI can and would undoubtedly interfere. Now, therefore, the question is whether Mr. Gangwal has raised tenable issues which SEBI can look into and seek to pass suitable directions to resolve those issues. I believe that the issues raised by Mr. Gangwal are substantial and should be looked into, and I believe SEBI has in fact asked the company for a response to the issues raised by Mr. Gangwal. So to the extent whether such preferential rights are valid, according to me they can be incorporated in the articles, and they have in fact been approved by the shareholders prior to the joining of the shareholders under the IPO. So that I don't think is a real issue. In fact, preferential rights are exercised by many other corporate entities. Recently, we've seen this issue play out in the Tata Sons drama. But if exercising those rights leads to diversion of funds or mismanagement, etc., there are recourses and remedies apart from SEBI also available to Mr. Gangal to approach the NCLT for redress.
So effectively, it comes down to whether these related party transactions procedurally or substantively were irregular enough to draw the regulator's attention, and therefore would that prompt SEBI to intervene and relook or review these rights as Mr. Gangwal has called for. Is that the correct interpretation, Mr. Cooper?
Absolutely, and I don't buy into the argument of the Bhatia group that merely because they reflect a very small percentage of the turnover, they are insignificant, because obviously the turnover in the airline industry is huge, and as the turnover increases, it's possible that the proportion of these related transactions reduce. But that is not a consideration which can or should weigh in dismissing these allegations as insubstantial.
I assume then that
I'm not saying that the allegations are correct. I'm saying the I'm saying the allegations are serious enough to warrant an inquiry.
I would imagine the inquiry, if at all SEBI asks for one, given that you've pointed out that they have asked IndiGo or Interglobe Aviation for a response, that inquiry would then examine the scope of the EY report, as Paiswani just pointed out, because Mr. Gangwal has raised issues with the thoroughness of that report and the fact that that report has not been shared with all board members but only been shared with the chairman of the board, and that SEBI would do its own independent assessment of these related party transactions. Is that within SEBI's, let's say, gamut of powers to actually do, which is to assess whether these RPTs were, in some way either misgovernance or bad?
I believe that NCLT would be the more appropriate forum to carry these issues to. And undoubtedly, there appears to be some cloud on the EY report, given the fact that it has been refused to be shared with board members. I can't see any justifiable rationale for that course of action. And that itself gives rise to some element of doubt as to the scope of the report, what the report says. And there do appear to be conflicting statements emanating from what was stated earlier about the related party transactions, and which is now being conceded by the chairman, etc. So, I mean, it's a gray area, and unless one has all the full facts before you can't really comment on that.
Yeah, so I think that was my question as well, that would it be SEBI that would actually review these related party transactions, or would it technically have to go to the NCLT? I believe Paiswani has a question connected to this.
Yes. Mr. Cooper, you made an earlier point that SEBI, can look into these RPTs. To my mind, these are slightly, different issues. I'll club them into different buckets. One is the issue of controlling rights that Mr. Gangwal has raised, and the other connected issue, but independent to it, is the RPT issue. At what point can SEBI use the RPT issue to then go into the AOA and say that, hey, these rights are in fact unfair? That is one. And if your view on can SEBI do that, and if SEBI can't do that, can the NCLT, if this case reaches there, look at the articles of association and then sit in judgment of the rights that the shareholders agreed when the company was founded?
I don't believe that SEBI will look into the issue of those preferential rights which the Bhatia group hold, because according to me, there is nothing infirm in such preferential rights being accorded. It is any wrongdoing which is thereafter performed in the exercise of those rights which can be the subject matter of scrutiny. So I don't believe that SEBI is going to have a relook at those articles at all. It may seek to delve into the allegations of the related party transactions, corporate misgovernance, etc. Because there is nothing wrong in having a rights embedded in one group to nominate directors. Ultimately, the airline was founded by them. They have the relevant expertise, and shareholders who subscribed in the public issue were fully aware of these rights and did so on the basis thereof.
Okay.
So I don't think that that's something which SEBI is going to interfere with.
Okay, Mr. Cooper, I have one last question to you. Now, Rakesh Gangwal has also requisitioned an extraordinary general meeting of shareholders in which he's asked for shareholders to vote on two resolutions. One, which is to enforce the code of conduct of this company, including the provisions which have to do with the fact that RPTs should not, ordinarily be entered into and should only be entered into if unavoidable or absolutely necessary. The second resolution he wants shareholders to vote on is to recommend to the board a whole set of protocols or safeguards in signing related party transactions. Now, he has made the legal distinction that he originally wanted shareholders to mandate to the board that these safeguards be put in place. Then he realized that mandating this would require a special resolution, or so he was told by the Bhatia Group, and hence that special resolution, which the Bhatia Group could have blocked, would have not worked in his favor. So instead, he is now asking shareholders to recommend this. But recommending to a board that has been fine with these related party transactions, can that have any persuasive power whatsoever if shareholders were in fact to vote in favor of Mr. Gangwal's resolutions?
Okay, before I answer that question, my view is that given that the requisition was issued to the company ought to have acted on that requisition and left it ultimately then for the shareholders to pass whatever resolutions they felt fit in their discretion. You are absolutely right that such a resolution, given the fact that it was only a recommendation, would not be binding on the board. But to your question as to whether it would have persuasive value, it ought to have persuasive value, and if the board did not act on the basis of those recommendations, it could perhaps strengthen the Gangal group in any action which it then desired to adopt before the NCLT in any grievances which it would raise against the Bhatia group. So I think that yes, the resolutions would have a persuasive effect. It would bring into a public domain the issues which are being raised by the Gangal group, and would perhaps act in some way to restrain the Bhatia group from disregarding those recommendations.
All right, fair enough, Mr. Cooper. As you pointed out, the company should have called this EGM, but it chose not to, which is also one of the concerns that Rakesh Gangwal has raised. Now it does seem that based on his requisition, an EGM date will have to be notified. I think within the next few days, I would imagine the company will have to do that. So we'll know then, what happens is the next step, and eventually, shareholders will have to vote on these resolutions if we do get to that milestone as well. But that's the broad legal framework. I believe the next big question to ask is on the stock impact front.
Yeah, and whether the business takes a bit of a issue as well, Minka, as you pointed out, that maybe there could be operational issues that could come in. And Amrit Pandurangi looks at that very, very closely. He's an aviation expert. Amrit, thanks for being with us and thanks for listening into this conversation. What do you think would happen to business for Interglobe Aviation as it stands right now over the course of the next 3 to 6 months if this matter were to linger for that long? Certainly seems to.
Yeah, see, business certainly will take a significant impact because, the attention of the key people in the management is going to be on this issue or these issues rather than what is happening in the market. And not only the market deserves a continuous focus, but the competition will take full advantage of the fact that the key people's focus has been taken off the market for a few days or a few weeks. And they will take full advantage. So definitely there will be a market impact. Now, whether that impact is a kind of a temporary impact that will last for a few weeks or months and then they will come back with a full attention on the market or not is too early to say. And I believe anything that happens in the market will get somehow reflected in the stock market. I am not an expert on stock market because we all know that it is not just how the company is performing in the market that matters to the stock market. It is also all other issues, including this corporate governance issue itself. Even if nothing happens in the market, the corporate governance issue itself will have an impact. What impact it will have, positive, negative, or volatile, etc., I have no idea. But clearly, in this market, both for the domestic segment as well as the international segment, it is very crucial that the owners and the key executives of the company are focused on the market.
True, and let's assume that they are trying to do that best. But Amrit, one final question on this. Would you reckon that there could be shifts in market share that we could see? Because Jet is grounded, InterGlobe has these issues. I mean, Air India, we all know is Air India. Do the other players stand to benefit as a result of this? Or is it too premature to talk on that?
No, I think other players will benefit temporarily, definitely. But whether they'll benefit in the slightly longer run, it's difficult to say. And whether they'll benefit more in the domestic or more in the international is difficult to say because, each of the other players have their strengths and attention on different segments of the market. So the, almost unbridled continuous growth of IndiGo to achieve the very high market share may take a kind of a small hit. Whether they will come back, solve these issues in whatever manner, bring it to a closure within a couple of weeks and then carry their attention back into the market is anybody's guess. But I suspect that this will go on longer than that. Corporate governance issues are never simple to deal with. And so to that extent, the competition will benefit for quite some time.
Okay, Amrit, we'll leave it at that. Thanks so much for taking the time out and being with us this morning.
I suppose then the many billion-dollar question this morning that every shareholder wants to know about is how impacted will the stock be today and in the days to come? Well,
speaking to a few people last night, nobody will be surprised if it opens lower today.
Of course.
Interestingly, Goldman came out with a very blue sky scenario report on Indian aviation. I don't think they, when they wrote this report and published
Somebody didn't tell them about the SEBI filings.
SEBI filings, yes. But I think Citi, for example, has come out and said that these issues might just linger for a bit longer than anticipated, maybe till October, November, or maybe longer. And that should have, as we were saying, Menka, I mean, even if it doesn't have in the best case scenario, even if it doesn't have an operations and therefore an earnings pullback, it'll certainly have a valuation pullback. So people shouldn't be surprised.
I just want to leave you with one thought, Neeraj, and I'm glad because Tushar raised the Tata issue. When the big fight between Cyrus Mistry and, Tata Sons and Ratan Tata, etc. happened, everybody thought that this was going to spell disaster in some way for Tata Sons, even though Cyrus Mistry was a much smaller shareholder in the company than, Tata Trust, so to speak, right? That battle has been going on. In fact, that case is currently at the National Company Law, Appellate Tribunal. And it's been going on since 2016. And at one point, while it hogged the limelight and the headlines, when was the last time you read about what was going on at the NCLAT?
That's true.
Right? So at some point, I would imagine that, and these are also two shareholders. Don't forget, Cyrus Mistry is a shareholder. Tata Trusts are shareholders, except the Tata Sons is not listed. The sort of downstream companies are listed. So there's no direct operational impact of any sort because each of those companies has their own boards. But the fact is that at some point, I think shareholders start fatiguing of these governance issues. And they will only look to see whether the operational command of this business, which is currently under Ronojoy Datta, will continue to be effective or not. And if the management can pull that off, and if between Mr. Damodran and Anupam Khanna, they can ensure that that doesn't get impacted, then hopefully the impact on the stock or the airline's business itself will be limited. Hopefully. But that's, all speculation.
Well, that's what the markets would thrive on. Mr. Cooper, take a moment to thank you as well for joining in today and being with us in this conversation. Thanks for taking the time out. And Minka, thanks for taking us through all that happened on this spat. And for all of you who missed this, do log on to the website. We have a collection of 3 or 4 stories that we've written enlisting the past, the present, and hopefully the future as well for InterGlobe Aviation. We'll wrap up this conversation. Lots more lined up on the day's market coming up on Indian Open. Stay tuned.